Welcome to NYSE TV Live, everyone. Good morning. I'm Kristen Scholler here at the New York Stock Exchange, and what a week it's been on Wall Street. Stocks are pointing fractionally higher as we look to start trade in just about 30 minutes. And that comes after NYSE listed big bank JP Morgan Chase exceeded earnings expectations. Well, as Chief Executive Jamie Dimon did say that the economy faces, quote, considerable turbulence, end quote. Dimon's remarks come amid fresh retaliation from China when it comes to trade. The world's second biggest economy struck back with 125% levies on U.S. imports, but did indicate that it isn't going to move any higher from there. That comes after the White House upped its tariff to 145% on Chinese imports. Well, President Donald Trump has dialed down his tariffs on other countries amid the escalation with China. We're talking 10% across the rest of the world. And to that end, traders gave equities a boost earlier after the European Union said its trade representative will fly to Washington on Sunday to try to make a deal. Let's take a look at what is on tap in today's show. Inflation remains top of mind for investors after the Bureau of Labor Statistics released March wholesale price data this morning. Yoon from Eddie Would Grow and Category Pirates is going to join me to break down the data. Plus, Dimensional Fund Advisors produced a documentary called Tune Out the Noise about turning investing into a science, thinking long term. Well, its co-CEO David Butler explains this evolution and what he is seeing across markets today. Plus, at 9:30 a.m. Eastern, we will have the opening bell. Project H.O.O.D is in the house to highlight its work with transformed lives and uplifting communities. That's its goal in the heart of Chicago. I'm going to be joined by CEO Pastor Corey Brooks a little bit later in today's show. All right, well, among the many headlines that traders have to digest today is the newest inflation read. At 8:30 a.m. Eastern, investors got their hands on the March Producer Price Index. That tracks the rate of inflation or the pace of price gains for businesses. And here's what we learned. The numbers were actually quite cooler than expected. So on a monthly basis, wholesale prices retracted by 0.4% versus an estimated growth of 0.2%. Year over year, prices rose by 2.7%. Economists expected 3.3%. 2.7% is still above the Fed's long-term target. But PPI, as they call it, usually is more of a leading indicator. We see the consumer numbers down a little bit more than this. It's clear here that businesses were buying and stocking up on goods, anticipating that these tariffs might take effect. Well, joining me now with more on the markets from Chicago is Eddie Yoon, founder of Eddie Would Grow and co-founder of Category Pirates. Eddie has more to share, certainly, on this market, the economy, and where we head from here. Eddie, it's great to have you on the show this morning. And what do you make of the market action?
Thanks, Kristen, for having me on. I think it is a bit of a toss-up. I think the U.S. government, we're playing multiple hands of Texas Hold'em at the same time, and that's part of the complexity with it. I think the macro consumer data going into all of this tariff turmoil was actually fairly good. Consumer personal expenditures are up in February over being down in January. Disposable personal income is up higher than it was in January. So those signs are good, but personal savings rates have also increased. So the consumer is probably also taking a step back. Now, what we're kind of looking at is going to be a few months of what I would call dirty data. It's going to be hard to know precisely what's going on. I think the consumer would be positive if there was more certainty, but they're going to pull back. But it's going to look like a bit of a pandemic level pandemonium at some level, because what you are seeing, as you mentioned, we expect consumers to spend more in the near term, stocking up ahead of tariffs and price increases with that. And so you'll probably see some data in the near term popping up, and maybe inflation ticks up a little bit as people are buying. But then what's going to happen is companies are going to pull back on inventory, investing until they kind of know what's going on. And that's going to create a set of supply and demand mismatches that's going to just cause a lot of wackiness in the system, much like COVID, where people bought up all the stuff, then there was nothing to buy, and then people overproduced, and then there was too much to buy. So we're going to go through a similar cycle like that again.
Interesting, Eddie. Now, in terms of what this means, the inflation data this morning, we did see producer prices actually decline. So we saw a decrease in the pace of prices month over month in this latest business inflation report. What was behind that? Anything more other than a pretty significant drop in energy prices?
Yeah, no, I think certainly as you're seeing, it's just kind of the steady state that things have been on where inflation, we're just kind of getting past the weirdo kind of comps that we've had over the last few years. And so I think that, remember, the percentages are versus year over year. And so we've had a more stable 2024, and going into 25, it was going to be more of the same, where I think prices were going to come down in general. Certainly there are certain sectors, energy, as you said, is improving. Insurance and car insurance in particular, I don't know when that's going to improve, just because of the actuarial noise has to get through with homeowners insurance having gone up significantly in auto insurance. And so I suspect that the steady state would have been 2%, 3% in that range. But again, there's going to be kind of weirdness in the system, as you can, travel data has been kind of funky. So TSA passengers is down 5% month to date, year over year, and after a month down in March. International travel to the U.S. is down significantly, actually. Forward bookings down 11, 12%, including significant decreases in travel from Canada and Mexico, probably reflecting some of the rhetoric that's been going on.
Interesting. Now, what can we glean from the bank reports this morning? They did exceed expectations. We know for the biggest banks, increases in trading volume certainly will be a boost, but banks can give us a sense as to the state of the economy as well.
Yeah, no, I think what you're going to see is probably some positive tailwinds for banks as consumers hoard more cash and kind of keep that money on the sidelines. So retail deposits will go up. That'll improve lending opportunities in the balance sheet there. However, on the other side of the banks, you're going to see, I think, just some odd noise from a stock trading perspective, as earnings are going to be coming out. CEOs are going to be less likely to give forward guidance or pull back or give a wider range, just because they don't know what to expect. I mean, we've already seen it with the airlines that have called down their Q1 numbers, as they have seen kind of DOGE-related impacts as government travel has really pulled back. That'll be followed by consumer travel. And so what we're kind of seeing is the economy writ large has been propped up by two super consumers. One is the government, and that's kind of under question as, again, DOGE continues to pull back fraud, waste, and abuse. And the second one has been the top 10% of spenders have been driving 80% of the discretionary spending going on here. And so those consumers are also going to pull back, not because they can't, but because they're not certain of what they're getting for their dollars. So it's less an affordability issue and more of a, is the supply going to be there? Am I paying more for the same things? Or because consumers don't mind paying more for new and different benefits, but they do not like paying more for the same old, same old.
Mm-hmm. What's your outlook from here, Eddie?
Well, I suspect that 2025 Q1, we'll see some of the early signs. Will probably have looked fairly good. Q2, I think, will be a lot rockier, and then the second half of the year will be a bit of a mixed bag, depending upon how long the uncertainty unfolds. I actually think we're kind of in a conundrum here, where 2025. You're going to see, I think, just because companies are going to not want to get over their skis, a pullback in spending, probably more layoffs related as AI continues to improve, and that's going to pull back on the consumer too. So I actually expect a weaker, rockier second half of 2025. And unfortunately, because the tariffs are taking months to unfold and to lock down, you're going to actually see this be a multi-year impact, where 2025 is going to be funky, 2026 will be kind of an odd year from a comp perspective, and probably 2027 is when we'll kind of get back to what is the new normal.
All right, Eddie Yoon, founder of Eddie Wood Grow and co-founder of Category Pirates. Eddie, thank you.
Thank you.
All right, coming up, while consumer price data on the whole was cooler than expected in March, the price of one item hit a new record. We'll tell you what it is up next.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan. Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies. And we're listening to our customers every day about what you need.
Welcome back to NYC TV Live, everyone. I'm Kristen Schiller here in studio. Well, eggs are commonly associated with Easter. That's just 9 days away. American consumers are focusing on eggs for a different reason. According to the March Consumer Price Index data, which came out on Thursday, the price of eggs rose to a record of $6.23 a dozen. That represents a month-over-month increase of almost 6%. Well, Kristen McGrath, senior editor at the Crazy Coupon Lady, joins me now for more on this story. Kristen, it's great to have you, and I know that your particular site has been tracking egg prices on a weekly basis. They have been notoriously pricey, really, in the wake of COVID. What did your latest data reveal?
So for the past couple of weeks, eggs have actually been holding steady in stores, which is kind of good news. But the bad news, according to the Consumer Price Index, egg prices were up in March. Wholesale prices also ticked up a little bit this week, according to the USDA, probably because of Easter demand. So retailers are trying to hold the line and keep prices steady, but the eggs aren't coming down anytime soon.
Interesting. And what's behind the inflation that we've seen, Kristen?
So the highest we've seen so far for egg prices was early March. The egg inflation has been climbing in the past couple months overall. Again, they're holding steady right now. But what's behind that is the bird flu. So with the bird flu, that's affecting the supply and the ability to get those eggs into stores. And of course, when there's less supply, there's demand. Retailers are also limiting the amount of eggs people can get, but still, it's hard to come by eggs. It's hard for retailers to keep them in stock, and therefore those price tags are remaining inflated.
So at the Crazy Coupon Lady, I'm sure you look to find deals. Kristen, any places that families and Americans can get a good price, or at least maybe the best price out there when it comes to poultry?
It's a little hard out there to find those deals because retailers are facing short supply of eggs, so they're not being as generous with those egg coupons. However, if there's an egg brand you like, you can go on their website, sign up for their loyalty program, and see what you can get. We recently found $1 off, which is actually pretty good these days, from Vital Farms. I checked my Target Circle app this week. I had $1 off for a certain brand of eggs. So there are ways that you can save just a little bit.
Interesting. So we saw inflation cool a bit in March. Certainly the consumer price data revealed that. We saw the producer price data reveal that earlier this morning as well. A tariff talk, though, out of Washington does remain in focus. What developments should consumers be watching when it comes to how the price of eggs and even other goods could be impacted here?
So when it comes to the tariffs, we produce most of our eggs domestically. So, if the bird flu supply issues start to subside, we should see those prices coming down a little bit. But the thing is, with tariffs, the rest of the shopping cart could go up. There's that blanket 10% tariff on imported goods from pretty much everywhere. So that could affect things like your olive oil, your coffee, your chocolate. And then, of course, we get a lot of our consumer goods from China as well, which is facing tariffs over 100%. So a lot of those small home goods that you might also pick up at the grocery store. So, you know, it's possible that the entire basket could go up, even if importers and retailers try to eat some of those costs.
Interesting. So, holistically, looking at the picture, Kristen, what would you advise to our viewers in terms of how to navigate this environment from a shopping perspective?
Yeah, you can't control the price that is on the price tag, but you can control your spending and your budget where you can. And so I would shop strategically, pick up those retailers' weekly ads, see what they have buy one, get one specials on, see what's discounted, keep a running list of the things you need. So when you spot it on sale, you spot a coupon, you can get it and try to get around those tariff price increases just a little bit.
Any items that might see the most impact? I know you had mentioned perhaps some of the home decor that we would import from China, but anything else that's really popping on your radar?
Yeah, so when it comes to China, it's a lot of those imported, very cheap, very affordable little home goods. So that could be anything from things you use in your kitchen to home decor to components of electronics to textiles and clothing. Really, the list is pretty long. I just bought some covers for my gardens at home, and those are manufactured in China and imported. So those could likely go up too. So really, you know, look at the tag, see where the origin of your stuff is coming from, and you might give yourself an idea of the things that might go up in the future.
Okay, great advice there, Kristen. And in terms of setting a budget, any good parameters for our viewers to take into consideration?
Don't panic buy, especially when it comes to perishable goods. But if it's something that has a longer shelf life, you might consider stocking up right now, especially if something is on sale and you have the room to store it. And that can kind of tariff-proof your pantry just a little bit.
Tariff-proof your pantry. I like that one indeed. I know some items might be stickier than others, but we'll continue to follow this story. Any other input, Kristen, before we have to let you go?
Right. I would highly recommend joining retailers' loyalty programs. A lot of times they will offer deals that are exclusive to their loyalty members. Those are largely free to join, so you might as well. And then you can see what's on sale. And so if it's something that you're running out of and it makes sense to stock up on, and you think, oh, this might go up because it's imported, you can take advantage and you can get it.
Kristen McGrath, Senior Editor for the Crazy Coupon Lady. Kristen, thank you.
Thank you.
All right, well, stay with us because up next, a new documentary focuses on bringing science to investing. We'll have those details on the other side.
Launch team is ready to proceed at this time.
You have permission to launch.
FPU is go.
LRD is go.
SRO is go. CDR is go.
Ignition sequence start. Engines on.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Liftoff. We have liftoff.
Hosting this event is a tremendous honor for us at the New York Stock Exchange. We like to remind people that our nation and our markets grew up side by side.
Lynn, thanks to you and the Stock Exchange for permitting us all to gather. It's so good to be back here.
But tonight, it's not just another elegant dinner among distinguished peers. It is a turning point in the history of the Medal of Honor.
We're honored to be in the presence of nearly 20 of our nation's 61 living Medal of Honor recipients.
This evening marks a renewal, a reaffirmation of our mission, and a call to action for all of us who are entrusted with carrying this legacy forward.
Because of people like you, we are able to do what we do every day, to turn that dream into a reality.
Welcome back to NYC TV Live, everyone. I'm Kristen Scholler. In March, the documentary Tune Out the Noise, which explores how academic and financial leaders challenge traditional methods of investing, made its debut on YouTube. Well, one firm using these new practices is Dimensional Fund Advisors. Co-CEO Dave Butler joined Judy Shaw with more. Let's take a look.
It's a big story, and it's one that we think is really important for every investor to know about. When you look at the kind of the evolution, if you will, of investing, the idea of indexing is one that is really kind of built in that story. So we talked to a lot of the academics who were there in the 50s and 60s who looked at data. They got a hold of big computers and they started asking the question about markets and how people invested. And what's happened is we've seen a major shift towards indexing over the last 34 years.
Now, Dave, throughout the film, we see how academic ideas are transformed into practical investment solutions. So from your years working directly with clients and advisors, what's been the most powerful way that this evidence-based approach has changed how everyday investors think about their financial futures?
Well, I think the biggest change is probably what I'd call the redefinition of investment advice. When you look back to 30, 40 years ago when I started in the business, it was really a high transaction, high commission, a lot of activity, a lot of noise. And that was really what investment advice was about. And what's changed is this kind of recognition that capital markets work really well. Prices reflect information. And you're able to actually invest in a way that's smarter. Smarter in terms of cost, low cost, smarter in terms of diversification, being very diversified, smarter in terms of tax efficiency, being very tax efficient. Those things are really good things for the investor. And so when you look today versus what we had, 40 years ago, the noise has been tuned out to some degree. The activity, the daily activity of trading and reacting to emotions like fear and greed have kind of pushed it to the side, and we've gotten to a more disciplined, efficient approach to investing in capital markets for every investor.
Now, you've worked closely with several of the pioneering figures that are featured in the film, including David Booth and Eugene Fama. Can you share a meaningful moment or conversation with one of these individuals that influenced you and your understanding of markets?
Sure can. We've had 5 Nobel Prize winners associated with the firm, so that's been really, really cool. When I look back at my career, even before I started, my first interview was with a gentleman named Merton Miller, who was a Nobel Prize winner in finance, and Merton was on our board at the time. And I just happened to be lucky enough as an interviewee to be in the same building with Merton. Merton went to lunch with us and sat me down and mentioned the 3 things that I just said earlier. That there's 3 things in finance that are going to really help you as an investor. First, keep your costs low. Second, diversify completely. And third, be tax efficient. And lastly, markets work. So that was really kind of for me a kind of a bellwether discussion. It was something that I have always thought about in my years at Dimensional and has resonated really well. And I think it's something that every investor, if they could do that, they'd be in a great shape in terms of investing.
Now, the film shows how challenging it was to introduce these revolutionary ideas to Wall Street. Even today, we see active management and stock picking remain popular despite decades of evidence. So what do you think will be required to overcome this?
Well, I think it's a lucrative business. So that's really kind of how advice was built in the early years. I tell a story about buying Boston Chicken when I was an early investor, and that was really built on this idea that an analyst had an idea for me, gave me the information. I thought that was a great pick, and I didn't diversify. I bought one stock, and I ended up losing about half my wealth at the time. So that was the environment that we were faced with. I think what's changed over time is just, again, more advice, better vision and better education around the capital markets, why there is a equity premium, how small cap stocks or value stocks work, why international stocks are helpful to a portfolio. So all of those things are things that we're learning, and we're hopefully educating and training clients so that they can actually be more disciplined and have a better chance at a great investor experience. The movie is just that. The movie is sort of a compilation of a lot of really, really smart people. Errol Morris has taken those people and interviewed them and hopefully built stories that I think are digestible to the average client. We talk about my mom as being an average client. She's not an investor, she's not a financial person, but she's somebody who would listen to these stories and tune out the noise and recognize that there's a story, a personal story behind it. And hopefully there's a theme and a kind of orientation around capital markets that she picks up along the way as well.
All right, and finally, Dave, looking ahead, what do you see as the next frontier for evidence-based investing? And how's Dimensional preparing for these future challenges while staying true to the core principles we see in the documentary?
Well, the great thing is the concepts don't change. So all the things I mentioned before, diversification, low cost, those are kind of standard. I think what's happened recently, I'd say, is the kind of the innovation through technology. So technology has made things more efficient. When you think about how the capital markets are delivered to the average investor, when I started, it was individual stocks, then we got into mutual funds, and now ETFs. Today, we're starting to launch separate accounts that are actually very, very low minimum separate accounts because of the efficiency of trading in custodial costs and so forth. So I think the theme there and the buzzword would be customization. The advice business and advice model now is very, very customized. Advisors are able to work with clients on estate planning issues and tax issues and charitable giving and even family dynamics. And they're doing that all with a basis of investment that is, again, low cost, diversified, and tax efficient. So I think there's going to be new wrappers and there's going to be more ways that the average investor is going to be able to access the capital markets. And that's kind of where Dimensional is now. We're working on that. Foundationally, nothing changes. We believe in this approach. We believe in markets. We believe that prices reflect information, so we don't try to guess on markets. But we do think there's actually wrappers and there's different vehicles that are going to help the individual investor invest properly going forward.
All right, thanks again for that interview. Well, stay with us because up next we will count you down to the opening bell here on Wall Street.
One thing that we've been struggling with in this market for a long time is interoperability, right? These fragmented systems where our customers, we talk to again and again about the fragmentation of the market and wanting something more holistic. We see what ICE is doing in the market, the innovation that you're focused on. We're really focused on innovation at IPC as well. And how can we use this as an opportunity to show real collaboration in a way that it hasn't existed before in this market? In my previous life, I spent actually 2 decades in fintech. And there was a point in time where competitors, banks, other tech companies had all these disparate point solutions, but they finally got their act together and collaborated and created real, true interoperability in interconnected systems. And ultimately, the customer is the winner. A trader sitting at their desk, using the ICE desktop for the market information that they're accessing, initiating a trade on ICE chat. But for some reason that gets escalated. There's a complexity in the trade. There needs to be a voice interaction. Literally, the trader can click on the chat icon and go directly into voice instantaneously. So when we talk about interoperability, from a user standpoint, they look and feel and operate like the same system. It's not toggling between applications, going on different screens. It really is seamless. And so often I hold up here what we have, and in our consumer lives, it's how we're used to interacting. But when it comes to our work lives, it's clunkier. We've been known as a communication device provider rather than an application platform business or a network business, which is really where we're moving.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in just a moment, Project H.O.O.D, which is helping others obtain destiny, is going to ring today's opening bell. It says it is on a mission to transform lives and uplift communities in Chicago. Now, since its establishment in 2012, it has been providing educational resources and tutoring to thousands of students, as well as offering mentorship programs and engaging in community development initiatives. Pastor Corey Brooks, who is this morning's official bell ringer, you see them on the podium there, is here to open the equity markets. He's going to join me a little bit later in studio with more details. Let's take a listen in here as we await the opening bell. All right, we are officially off to the races. The stock market opening for trade. Lots to digest this morning, certainly between bank earnings, escalating trade tensions with China, but the EU reportedly coming to D.C. on Sunday to negotiate. On top of that, some PPI data, inflation data this week, today and yesterday, that did show price gains less than economists had anticipated. Joining me now with more on the markets from Dublin, Ohio, is Ed Siddell. He's the CEO and Chief Financial Advisor at EGSI Financial. Ed, great to have you on the show this morning. What do you make of this market?
Yeah, thanks for having me. With the pause for the next 90 days, I think we're going to continue to see a lot of volatility. If we look at the VIX being at the level that it is, we're going to continue to see 2 to 3% swings, on a daily basis.
Interesting. What does that mean for investors? How should they be navigating this particular environment?
They should really just hang on. If they have money sitting on the sidelines right now, I mean, this is really an opportunity to buy. If we look at the PE ratio, it is significantly lower now than it was even at the beginning of the year. So this is really a buying opportunity. We tell everyone it's almost like investing in a 401k. You keep your dollar cost average all the way down and all the way back up. And so then you're going to be able to recover any losses that you had on paper that much quicker. And really the only time that you lose money is when you sell. So if you're already invested, now's the time really just to sit tight and be patient, because cooler heads are going to prevail.
Ed, my question to you here is, if people are in a position to buy in this market, as you referenced earlier, are there particular stocks or even sectors or indexes that look attractive to you at these levels?
Yeah, absolutely. I believe it or not, even though it's the earnings season for financials, I really like financial. I know that they've been giving a lot of warnings to hedge their bets for recessionary fears, to lower expectations, but I still believe that financials are going to be strong this year, especially if rates continue to lower. Especially when we look at some of the smaller and regional banks. I really like energy and industrials, manufacturing, as that continues to come back. And really, believe it or not, technology. There's a lot of technology out there, especially in the AI sector, that there's so many good deals right now all the way across the board. It really is a buyer's market for the first time in years.
Interesting. Ed, a question to you is, what do you make of these bank earnings? Certainly, they exceeded expectations. That might not have been a surprise. Those are backward-looking figures, though, and we did get some commentary on the economy moving forward.
We thought that the earnings, they were going to at least meet expectations. We did not. We were actually shocked that they blew it out of the water. JP Morgan Chase, Morgan Stanley, Wells Fargo. And I think we're going to continue to see that going forward. What we're also seeing right now is they are really hedging their bets, expressing recessionary fears, although Goldman Sachs backed off of that. I think a lot of things are really going to be contingent upon these next 90 days. The trade talks, the tariffs, especially the tariff volatility as it relates to China. But we're starting to see a lot more countries come to the table and willing to negotiate. So the market is really looking for any kind of good news. We saw it on Monday when there was a leak, maybe even a trial balloon for 30 seconds, where the market swung, that there was going to be a possible pause for 90 days. The market went from being 14 down to over 800 up. And then within 30 seconds, once they said that was a rumor, then it went back down again. And then once they did put a pause on tariffs, the market went crazy. So really, the consumers, investors, they're really just looking for any type of good news. So these next 90 days are going to be paramount to the market.
These next 90 days will be very important. We had heard, of course, from the White House and members of the president's cabinet that 90 days, of course, is the tariff pause for some particular countries. But also the Treasury Secretary had said he thinks some of these deals can be negotiated by June, within 90 days or so. I am curious to get your take, Ed, on the inflation data that we got today and yesterday, because it certainly came in less than expected. And I think if we were maybe not in this environment, that would be a good news, right? Because we had seen that inflation had been so sticky. Is there any correlation to make there between that slowdown in inflation with a potential broader slowdown?
It could be. We're seeing really demand slow down all the way across the board for goods, but we're also seeing a slowdown because of energy costs going down and food costs going down. And remember, energy, diesel fuel, that's really what powers the economy. So if we can continue to lower energy prices, that's going to lower inflation and, make living for everyday America that much cheaper. So we really have to look at it on both sides of the coin. My biggest fear going forward really is the tariffs. And then also being able to pass this reconciliation bill.
Yeah.
I think we need to pass the reconciliation bill and get deregulation going forward. And that's really going to strengthen the economy, even as the cost of goods and services may increase a little bit.
Ed Sedale is the CEO and Chief Financial Advisor at EGSI. Ed, thanks so much for joining this morning.
Absolutely. Thanks for having me.
Okay, everyone, here's a live look of the trading floor. And still to come, Brian Fairbanks, CEO of NYSE-listed decking company Trex, tells Judy Shaw how it is using new technologies to enhance outdoor living ahead of the spring season. Plus, today's bell ringer, Pastor Corey Brooks, is going to join me in studio to discuss some of the latest initiatives that Project H.O.O.D is driving to help bolster Chicago. Later in the show, the founder of Bog Bag, Kim Vaccarella, is going to share why her company's bags and accessories are leading to record sales at the company. Stay with us.
It's not about being worthy. It's about being willing. And when I look around this room, I know every person in here is willing to execute on the plan in front of us and help us continue to deliver what we've been doing. We wouldn't be here without each and every one of you. We're about to ring a bell, and that bell is not a finishing bell, that's a starting bell. That's going to start the most exciting race that we've ever done. We've made it to the starting line, we've done the work, now it's time to get after it and see what we can do next.
This is just the beginning. And we are setting the stage for even greater things to come.
This is a historic day for Titan America.
It's both an honor and the milestone to stand here at New York Stock Exchange.
I'm very proud to be part of this winning team.
You made this happen with your passion to grow the business and your commitment to excellence in everything you do.
Looking into the future, the Titan America is on to its next chapter of success.
We are ready and will be seizing all opportunities. So let's ring the bell with confidence for our success.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. As the weather heats up with temperatures regularly topping 60 degrees, starting Sunday in the city, more people will be relaxing, hopefully on their decks. The CEO of wood alternative composite decking company Trex, Brian Fairbanks, recently sat down with Judy Shaw to talk everything from new tech innovations to company growth. Take a listen.
We were pleased with the performance that we saw in the fourth quarter. The consumer actually strengthened a little bit sequentially from third quarter to fourth quarter. Our high-end products continued to sell at double-digit rates. That wasn't that surprising. We'd seen strength there all year long. But our entry-level products, that's where we saw the improvement and drove the outperformance into the fourth quarter of this year. And so we were able to overperform from a revenue perspective as well as on a bottom line perspective. Moving into 2025, we recognize that the economic environment's going to be a bit choppy. We're not sure for how long, but we really have a three-pronged strategy to go after that. The first thing we'll be going after is a barrage of new products coming to the marketplace. railing products as well as decking products, two things that fit very well with our company. Second thing, we'll be expanding our distribution so that we can make sure that when a consumer is looking for our product, they're able to easily purchase that product. It's sold wherever they're looking for it. And then the last thing is a continued really strong focus on branding. Make sure that our brand, the product attributes, are put in front of that customer as they're in that shopping process.
Now, Brian, looking ahead to this year, what are some of the key drivers that you see that are pushing your growth? And how does the expansion into the railing market contribute to this outlook?
Yeah, going back to my comments about new products, a lot of those new products specifically are in railing. Today, we are the largest manufacturer of alternative railings in the country. And alternatives meaning alternative to wood. We still see the opportunity to be able to double that over the next 5 years. We have a new aluminum railing systems, we have new steel decking railing systems, as well as a mesh rail, cable railing system, and glass rail system. So significant opportunity to make sure that we've got the right systems that our consumers are looking for. When they already make that choice to install Trex decking, we want that railing to go along with it.
So you mentioned wood. Wood is actually your #1 competitor. How are you converting the wood market to sustainable composite products?
Wood's our #1 competitor, both for decking and for railing. 2019, we launched our enhanced product line, and that was designed specifically to go after that wood buyer. It sells for about 2 times the price of wood, so roughly $2 a linear foot. So for an extra $1,200, $1,400, you can be putting Trex composite decking down. And then the key part of that strategy is also to have a product that's just a little bit more expensive, but gives a higher level of aesthetics and performance and provide that upsell to the consumer. It's been extremely effective for us. Since we've launched that, we've seen the share of composites go from, back then it was probably around 18%, and today in 2025 it's around 26%. So it's been an effective strategy.
Now, Trex decking uses 95% plus recycled materials. How does sustainability drive your material sourcing?
We're really proud that we can manufacture an extremely sustainable product. We've been doing this since the inception of the company, almost 35 years now of buying this stretch film that's available to us, mostly polyethylene throughout the US, a little bit up even into Canada, and turn that into our deck board. We were doing it well before it was cool to make sustainable products that are out there. The reason we do it is we can make a great product. There's plentiful supplies for it. We can do it very profitably. And even better now, the fact that we can keep these materials out of a landfill, and that's important from a societal perspective.
And finally, with a record number of new products in 2024, including sun comfortable tech, how does innovation drive your strategy in outdoor living?
We've got a great R&D team, and it's extremely important. You may think it's decking, railing. How difficult is it? It is very difficult. And you mentioned sun comfortable technology. That allows us to have our deck boards out in the blaring sun in a southern environment where it could get very warm. That technology allows us to keep the temperature of that deck board down. That's something that our customers have specifically asked for, a concern that they've had with high temperatures. You see it on asphalt, you see it on cement, you see it on sand. We're able to do something using technology to be able to reduce that temperature. We launched 2 new colors in December of this year of our Lineage product line, and we're starting to bring it out to our more entry product lines as well too. In January of this year, we launched 2 products within our Enhanced product line that also have the technology. And then in the second quarter of this year, we'll relaunch our entire Select decking, which is a mid-price product line. And again, that will have sun comfortable technology. So we're excited about it, and a lot of great things from a knowledge and capability perspective of how we work with polymers.
All right. Well, thank you, everyone, for tuning into that interview. Earlier this hour, Project H.O.O.D, an organization looking to bolster Chicago neighborhoods, rang the opening bell. We saw them on the podium. And joining me now with more is the CEO of the organization, Pastor Corey Brooks. Pastor, thank you so much for joining.
Thank you. I'm glad to be here. I appreciate it so very much.
Welcome to NYC
yes.
from the Windy City.
From the Windy City.
We're happy to have you.
Thank you. I'm glad to be here. Really excited.
We're excited too. What more can you tell us about Project H.O.O.D?
So Project H.O.O.D, H-O-O-D, stands for Helping Others Obtain Destiny. It's a non-for-profit organization on the south side of Chicago. where we're trying to eradicate violence and poverty one neighborhood at a time. Our goal is to transform a neighborhood once known as O Block, named after a young man named O.D. Perry who was shot and killed. The gangs took the O in his name and started calling it O Block. And so we decided to keep the O, but we're calling it Opportunity Block. And so that's what we're doing on the south side of Chicago.
Amazing. What brings you to New York?
So I came to ring the bell, the New York Stock Exchange, the opening bell.
How did it feel?
Oh, it was so much energy and so exciting. You know, I felt like I was a part of history, and it was really amazing, not just for me, but for our team as well to be able to participate.
Yeah.
Couldn't ask for anything more.
Amazing. What are some of the changes you're seeing on the ground in Chicago with the support of your organization in that neighborhood?
So we're seeing transformation of a neighborhood that was once known as one of the most dangerous blocks in all of Chicago. In 2014, the Chicago Sun-Times said it was the most dangerous block in Chicago. We said we're going to change that, and now we're not even in the top 30 most dangerous blocks in Chicago. Matter of fact, we've had crime drop 75% because of the work that we do. So the transformation that we're doing on the south side of Chicago in our neighborhood, 66 and King Drive, is so important.
What more can you tell us about the tactics behind this transformation, how we see it in action, how we get to these results?
Yeah, you know, you have to get people to take responsibility for their lives. They can't keep being victims, and they can't keep blaming government. So we say, listen, we're going to give you all the opportunities, we're going to give you the resources and the tools that you need to take your life in control. So we have classes. We have a trade school where we teach carpentry, electrical, plumbing, HVAC, automotive. We have a mentoring school as well. We have the big part, an entrepreneurial school where we're helping to start businesses. And that's one of the things that is really important to our neighborhood, because if we're going to transform it, we have to have strong, vital businesses. And so our entrepreneurial school is real strong. And then we have culinary arts school. It's so much that we're doing. It's a 90,000 square foot facility that we're building.
Wow.
The Robert R. McCormick Leadership and Economic Opportunity Center, and we're excited about it.
So we're just starting here the second quarter of the calendar year.
Yes.
What are some of your goals, or what are some of the things we can expect throughout the rest of this year?
Well, we're going to finish the building. Our goal is to finish this night. We're about 40% into the building. If you go by 66 and King Drive now on the south side of Chicago, you'll see a concrete structure with steel. So we got to finish the building. We've raised upward of $40 million so far. We still have another $10 million that we still need to raise. We're going to start a school for boys who come from single-parent households and who live below the poverty line. We're going to continue to do all the work necessary to have people to take control of their lives so that we can create a model for what can be done, not just on the south side of Chicago, but a model for what can be done in urban America.
Pastor Coy Brooks, he's the CEO of Project H.O.O.D. Pastor, it's great to have you.
Thank you.
Thank
you so very much.
Awesome. All right, well, stay with us, because up next, one company says it's achieved $100 million in sales just last year. Its founder is going to join me in studio to talk about what is driving demand and how it's navigating this environment with some props. We will have those props up next.
So you're here today celebrating Ireland Day, ringing the opening bell. It's always wonderful to have you here.
Well, Judy, it's an enormous honor to open the market. It's a very important partnership platform for us with the New York Stock Exchange, as you know. And we're incredibly happy to be back here again with some very interesting business and political leaders.
So, Ian, you're president of Ireland Inc. Ireland Inc. has been in existence for over 10 years now. So tell me, how did it start and how has it evolved?
Ireland Inc. started at a very volatile time economically for the world. And the idea behind it was that we would bring together business and political leaders who had shared challenges at the time to create a platform of dialogue and engagement and transaction. And today, from an Irish perspective, here we are in the United States. We're the 6th largest business investor in the United States, employing hundreds of thousands of Americans directly and indirectly.
Now, today you've got a group of U.S. and Irish business leaders that are joining you, along with representation from both governments. So what are some of your main takeaways from your discussion?
Again, Judy, we are geopolitically in interesting times. So today is a really, really valuable platform to bring political and business leaders together. There are challenges and to growth. We have to mention things like tariffs and so forth. So the opportunity today is to get ahead of those discussions. Like with any crisis, you have the discussion about the crisis before the crisis. And today we brought together business and political leaders from the United States and Ireland. And we've had some very, very valuable dialogue, engagement and outputs.
Now, lastly, there is a more magnified focus on economic relations in a global context. Given your role with Ireland Inc., what do you think is unique about the U.S.-Ireland economic relationship?
Well, I think there are a couple of things. I think our track record, we have a...
Welcome back to NYC TV Live, everyone. Well, Bog Bag, which offers an array of bags and accessories, says that it's achieved $100 million in sales in 2024. And joining me now for more on this is Bog Bag founder Kim Vaccarella. She's here in studio with some bags. Kim, thank you so much for joining.
Of course, thank you for having me.
Okay, so we know that this bag, your items have been extremely popular, especially on social media. So what do we have here on set?
So this is our Biddy bag. This is the third bag in our collection. We started with our largest bag, which is our original. And then we went to a baby bag, which is more of a medium bag. And then the Biddy bag has been super, super popular.
Yeah. Now it seems like it would be a very flexible material in the sense that it is sturdy, but like if something spilled on it, it would be able to be durable and hold up. What can you tell us about like the infrastructure of these bags?
Yeah, so when I created Bog Bag, I wanted something that was washable, something that would hold all the things, would be durable and sturdy, and most importantly, the sides wouldn't collapse in.
Yep.
When I was going to the beach with my kids when they were younger, all the stuff would fall out of the bag and into the sand, making it impossible.
Yeah. Okay, so we have this as well. What can you tell us about this bag?
So this is, you know, a cosmetic bag, an organizing bag, an everything bag. But our customers have been loving it. This went wild on social media recently because there's so many uses for it. You can use this on its own, or you can put it inside of your Bog Bag to keep smaller items within reach.
I like that. Okay, we have a few more surprises. So drum roll, please. We're going to take a wide shot. We've got this bag as well. And we'll put it this way because it has a nice, cool cup holder. Kim, what is this bag best for? By the way, I love the tie-dye design.
Yes, this is our Sugar Rush collection and well received as well. This is our Bevy cup holder, so this will hold all of your drinks.
How clever is that?
A cup of coffee, a water bottle, whatever it is. And this is our baby Bog Bag.
Yes.
So what we're seeing is in our large Bog Bag, which I'll just give you a quick, because
Now
it's
that's
very big and
cool.
takes up the whole screen.
Yeah.
But this is our original Bog Bag. This is going to carry everything for the day. The baby Bog Bag, people are using it for work, for school. Teachers and nurses love this size. Because they can put it in. I use this size because I put my laptop in it and I don't have to worry about when I put it down on the ground that it's going to fall over.
Okay, let's take a look at that big one because there are some accessories that I think are pretty cool. Maybe you can even pull off the topper here.
Yeah. So this is our Bog Topper. This is so fun. I couldn't wait for this to come out. It sits right on top of your original Bog Bag. It has 4 cup holders and then a little charcuterie area in case you want to get fancy on the beach.
Now that's nice.
Yes.
And then flip that around because on the other side there's this
Of course,
thing
we need
too.
a cell phone holder.
Oh, a cell phone holder.
This is called Call Your Bog.
Yep.
And it's a cell phone holder that fits any size cell phone, and it just keeps it in reach.
Amazing, and they can stack and stack and stack, and it looks like that one right there would fit a beach towel perfectly.
Oh, many beach towels.
Okay.
Yeah.
I gotta ask you, these are so cool. Are you exclusively manufacturing in the U.S.?
No, unfortunately, we're currently manufacturing in China. You know, we took the necessary steps and we went to Sri Lanka and we went to Vietnam in January. We found viable options there, started the sampling process, got everything rolling, and then the news came out that Vietnam and Sri Lanka were hit 46% and 44% respectively.
Yes.
And then China just kept going up. So we're really in...
Including today.
Yes, exactly. So every time I feel like I'm talking about it, it goes up again. So it's so hard in this uncertainty to figure out what we're going to do. We're keeping our relationships with our Vietnam factories and our Sri Lanka factories open and just, you know, seeing where to go next.
Okay, so you're able to be flexible when it comes to manufacturing, but how is this impacting prices, the prices that you pay and the prices that your consumers are paying?
Well, right now we're looking at 145% additional tariff. I have tons of containers on the water, so those would all essentially be hit because the tariff is going to pop in once they get cleared.
Right.
So we're, bonded storage. What are the options? So we're looking at all of the different options. Do we hold shipments behind that the amount of containers that we have coming in? I believe there's 45, and then we have another 100 containers on order.
Yeah.
So where do we go from here?
So all of these are questions that you're considering.
Yes.
Where do you want to take Bog Bag from here? Ideally, what are your goals?
Well, listen, it's, with everything else that's going on, it's business as usual, right? We need to keep bringing our customers and our stores new product, fun and exciting designs, new accessories to go along with their Bog Bag. So we're going to continue doing that and, just hope for the best that all of this will work out.
Yeah. Well, they are really nice bags, I must say. They do seem very durable, great for a family, great for anyone on the go, and great for what might be a rainy day here in New York City. They
Easter
can just...
baskets. Right now, everybody's using them for Easter baskets, so it's fantastic.
That's so fun. I'm sure social media has been very important probably in your growth strategy.
Absolutely, absolutely. Talking to the customers, seeing how they're using Bog Bags. I mean, it was originated as a beach bag, but then it became so much more than a beach bag. It's the everything bag.
Yeah. All right. Well, if people want to find it, what's the best way to buy one of these bags?
So we're on bogbag.com. We're in 9,500 doors across the country, from major retailers to specialty retailers. We'd love when you support our small businesses that carry us. So there's a lot of options.
Kim Vaccarella, she's a founder of Bog Bag, here with some really cool bags. Kim, thank you.
Thank you so much for having me.
All right, before we wrap this particular show, we do have a special shout out, the NYSE team, and I want to wish our lead booking producer, Mel, a very happy birthday. She is officially celebrating on Sunday. We are so grateful to Mel for all the work that she does, all the energy that she brings to the team here at the New York Stock Exchange, and she is a key element in what makes these shows happen every single day. So from us to you, Mel, a very happy birthday, and I know our viewers are wishing Mel a happy birthday as well. It's going to do it for today's show, everyone. We hope you have a great weekend. We'll be back here 9 a.m. Eastern Time on Monday. A lot to cover per usual, of course, in this very dynamic market environment. Thanks as